Hi, everybody. Thank you very much, Mahmood. Please let me know how do you want me to proceed. You want me to talk about the company specifics? Is other companies also participating at the same time while I'm giving out my figures? So you have to clarify that first, please.
Sure. Mohsin साहब, what we've done is हम लोगों ने घंटे घंटे का टाइम स्लॉट रखा हुआ है, तो at the time this 1 hour is only for you. इस वक्त
Okay.
बाकी लोग जो हैं वो नहीं है. All the people over here, there are clients who are participating.
Okay.
तो this 1 hour will only be with you. So if you want, if you can give us a brief about the company, how the company is doing, what's going on, and after that, once you're done, then we can do the question and answer.
Okay, that's good to know. Okay, as you know that this year you must have reviewed all the 9-month numbers. This is a good year for textile. The exports of the textile sector have also increased in dollar term by 23%, which is a significant increase. And more importantly, this increase has come from the areas of value addition. And the decrease has happened on the cloth side, on the cotton side, and lesser value-added products have decreased. And you must be aware of the incentives which has been given by the government of Pakistan. So mainly, what we believe in textile sector is that this government's desire is to push as much exports as possible, and textile being the largest sector where you can do it fairly quickly. So the government has given a lot of support to the exporting industry, and particularly to the textile sector. Now, these sport areas are like the cheaper electricity is being given. The gas rate is cheaper. Other thing, which is a huge thing, and for which the textile sector is benefiting currently, and it's going to benefit in the coming few years, is the export-oriented financing, which is being given at a subsidized rate. Now, the subsidized rate varies from 4 to 5%, but the clients like the premium clients like us, we also negotiate the bank spread. So just to give you an idea, about 90% of our total debt in textile is all subsidized, and the average cost for a loan is between 2.5% to 3%. The weighted average cost is about 3.25%. So which has not happened in Pakistan, and these loans previously, and these loans, they are particularly fixed at these rates for the next 7 to 10 years, 5, 7, and 10 years. So this is a big support which has been given and it is still continuing. There's a lot of infrastructure is being put up in textile sector, and we believe that going forward you'll see the export numbers to grow further. The other thing is, apart from these benefits, some sales tax benefit has also been passed to the exporters. So what was happening previously, that you had to surrender 10% of your output tax. Under this finance bill, they have taken away this condition. So factually, what is happening is that you're getting a boost of about 10% in your cash flow in terms of the sales tax. So that is also a help. Specifically for KTML, KTML is one of the best performing company. We as a management, as a board, we do a peer analysis every year and every quarter. If you will look at our numbers and if you compare with our comparable units, for the last 6 to 7 years, our average GP had been over 16-17%, which is very good considering the textile. Um, uh, and the reason basically for this is that we are into a niche market when it comes to yarn, and also when it comes to the bed sheet and homeware products. Our average yarn count is about 60, which is a finer count, which has in Pakistan, it fetches better price, and it's also because it goes into the woman wear products. So you see the lawns and all these woman wear products which our wives are buying. The average suit price ranges anything between, there are different categories, 3,000, 5,000, 9,000, and 10,000. Invariably, in all these products, the cost of the fabric is anything between 800, 900, or 1,200 rupees. So there are huge margin. There is an affordability, factor of the buyer here. So if we increase the price of a lawn, the fabric only, say about the top end by 10%, so that's only 150 rupees. That's not even 1.5% of the selling price at which he's selling. So they're not very keen. They're not very price sensitive. And this business is growing every year. So most of our yarn goes into this local business, which is giving us much better returns than the exports. Again, on the export side, we are producing high thread count bed sheets, which is also a niche product. If you look at our numbers, like 10 years ago, we used to do a lot of volumes in our home textile division. We used to produce like 4 million metric tons. And then we were selling most of our products to the big store, Macy's, Walmart, JCPenney. And the way they operate, they don't let you make money. So what was happening was there was a very, very thin margin. And they will have the contracts which will allow them to walk away, and they will inversely, the contracts were designed like in a way that we are tied up. If the prices go up, so we are tied up with them. If the prices go down, they would just give us 2 to 3 months projections, and they can fade away from the contracts. So we were never making. When we were selling like 4 million to all these stores, we were losing money in like either breaking even or losing 3 to 4 crores a month. So what we decided like about 10 years ago, that we have to go into a niche market. Instead of selling all our production to you see 3, 4 big stores, we said we'll not be selling more than 10% of our production to any single customer. And in this way, we move to a niche market. We diversified ourselves globally as well. Currently, our 45% of exports are non-US based. And then about 10 to 15% is Australia as well. So we are well diversified, and in the process we increase the price, and that is why you see the GP this year also. If you look at our numbers, the GP will be probably something close to 17%, which is quite good for the textile. If you'll go further down, our financial costs, because of the fact that most of the loan is subsidized, almost all of the loan is subsidized. Our financial cost to the turnover is just to little over 2%. Despite the fact that we have increased our borrowing from about 9 billion to about 11 billion. This year, our turnover will hit about close to 30 billion. And considering the percentage what we had, we should be making about 8 to 9% plus the kind of net number we had for 9 months. With this,
sorry interrupt किया मैंने आपको. रिक्वेस्ट हमें काफी आ रही है, अगर थोड़ी प्लीज उर्दू में भी बात कर लें, क्योंकि we have a diverse form of clientele who is participating, over 100 people. So please match. Thank you.
That's
sorry
okay. That's okay. No, that's okay. It's better for me. So I thought we have some international participants as well.
We do have. So perhaps Mahmood, we might stick to English because we do have some people who don't understand Urdu. I think all of us can understand a little bit of English. So sorry about that.
Yeah. So before we move to question answer, Ali, I'll just point out one thing. If I don't know, a few of you guys would know that, the capitalization, the total capitalization of the company is quite low at the moment. So despite the fact that this company had been the best textile performing company for the last 5 to 6 years in terms of percentage, our net profit as percentage of sales is highest for the last 4 to 5 years, either number 1 or number 2. In 5 years will be like 4 years number 1 as percentage of sales. But despite being the best textile performing company, our textile operations by the market is negatively priced. Now this company, KTML, is a holding company for cement as well. It owns 55% of maple leaf cement. So with the current price, so at 55%, $161. So it is holding 170, as of today's value, 170 million worth of maple leaf cement. Its own capitalization is not 170 million as of today. So despite the fact that we are one of the best textile performing company, our textile operations is negatively priced. So with this note, probably I'll ask you guys to ask questions, and anybody is free to ask in Urdu, and I can reply in English.
Thank you, and perhaps I can kick off with the questions. And you actually set it up really well by highlighting the massive mispricing in the stock, that actually it's actually priced at negative equity given the value of the holding companies which you have. Can you give us some sense of what's the long-term plan then for how does the group and the management look at the company, the plan for the company for the next 5 years?
Actually, I am currently working on the next 5-year plan, and the board has asked us as a management to come up with 5-year plans, and what we are doing is this company would have a cash flow of like something like 3.5 billion, say. And then we have an access to the cheaper funds as well, because the LTFF, the long-term export facility loans, which are given to the exporters, that are also available. So we will be aggressively going for an expansion plan, which would mean that I'll have to advise a capex outlay. So probably we'll be doing like around 4 to 5 billion expansions, which would mostly be in our spinning sector, in our cloth section, and then ultimately in our processing. So we are a value chain, and at Pindi we have a lot of land. It's in the middle of the city, and what we'll do. I mean, there is a room for expansion there. We don't have any issue. The other thing, what we are doing as a company is, converting our power as quickly as possible into the solar. So we have already put up 7.5 megawatt of solar electricity, and that is also, these are cheap loans given by State Bank of Pakistan to convert your. So we are putting up another 3 megawatt in next 6 months, and then we'll continue to explore the possibility of putting up more solar. So we believe that the sector in which we are, this will have good growth for next 2 to 3 years.
Great. That's very, very optimistic and positive, hearing both about the growth in the sector as well as your plans for expansion, as well as your plans for moving to cleaner energy. I think we are big believers in importance of climate change.
Yes. And those of you guys who were quite keen in CRS, you would be probably surprised to know that we have a zero water emission from our plant. Because within the city, we have waste heat recovery plant, and the water is a huge problem in Rawalpindi. It's a huge problem in Lahore as well, and we believe as a company that the water is going to be a critical factor going forward. So what we do that now in Rawalpindi is a lot of rain is happening. So what we're doing is we're collecting rainwater. And whatever water is collected, we add it to our system. We have tube wells also which take water out of ground, but all the discharge, it goes back into the plant. We are probably one of the very few companies in Pakistan who recycle water 100%, and we use our water treatment plants 100%. Because a lot of companies have put up the water treatment plants because it has an operating cost as well. So they don't operate it. They just do it for the audit purposes when the buyers come. But for us, it is very critical because we're short of water also there. Number one. Number two, we are in the middle of the city. We can't discharge this water anywhere. So what we do that. We are working on this zero emission basis. So that is also one thing.
Great. No, that's really impressive. And I will move to questions from Hassan. He has written a few, but I think you've already answered one of his questions, which was about sustainability. Before that, I have one more question. Mohsin Saab, I think your outlook was very promising in terms of your expansion plan, and you mentioned some of the initiatives and the incentives which the government has taken. Now, if you compare the sentiment in textile sector, how would you rank it compared to the previous 15, 20 years? Do you think we are at a better place than the past? As in, we have seen a pickup in textile exports. What I'm trying to gauge is this sustainable? Is there something different this time?
Ali, you said that we are actually optimistic this time around. Because you see, the mere fact that the government is looking at the numbers, if you see the Pakistan's history last 15 to 10 years, immediately preceding this government's tenure, uh, the people, I'm not saying they didn't not focus on the exports, but I'm saying they were not very, very keen in pushing the exports. They were not looking at export numbers so keenly as this government is doing. The, I mean, in the industry, we say that when we have to manage something properly, we just start looking at it from the board point of view, from the management point of view, from a managerial point of view. Just start looking at this thing. You start thinking and you start improving the things. This government is actually trying to. They have realized that you can't import your dollars, you can't import your exports. You have to generate dollars for running your country. You can't just be importing everything just on the pretext that it is cheaper, because if you start doing that, you'll be killing your local industry. Even the local manufacturers which is not exporting, which could have catered for your local demand. So this is what especially Mr. Dar, this is what he was doing. This government, because of the focus on the exports, we believe that the focus will exist, and the exports will continue to grow, and all the benefits which I have already spoken. And then the one thing is also different this time around is the exchange rate flexibility which they are doing. Even though I did not agree we import a lot of coal in one of our group company, and then we do exports also. So there is a benefit on one side on an exchange rupee appreciation, and there is a loss. But then I didn't agree to what government had done like 3 months ago, taking the dollar to 152, taking rare to 100 plus. Pakistani current account is not, it's so fragile, it can't sustain. You have to keep it at a level of 98, 95. So I believe they did one experiment, and now they have realized that the export number has hit, as 6.3 billion. So if they do the rate flexibility as promised by the governor, if they do the rate flexibility, it is going to help the exporter. And more importantly, it is not going only to help the exporter, it is going to help the local manufacturer. Because agar aap 160 ka, if you make it, if you from 160, if you make a dollar 140, the import will become cheaper, and the cost of production here in the local industry is high. You will be importing everything.
So, thank you so much for giving that insight, and firstly saying that, as in you highlighted that you think that the government is taking incentives on giving incentives and focusing on exports, and so you think this is sustainable. And secondly, for giving your opinion on the exchange rate, because I know it's a very heated topic and people have different opinions on it. And a lot of people think that Pakistani exports are not sensitive to exchange rate, but you are saying that it is. So thank you for
it is. I mean, let me, even though it is not the subject, the more importantly is that imports become cheaper.
Yes.
If you so exports will pick. They will pick up in 2 to 3 years time, like 23% growth you have seen. Now they will pick up, but then the immediate impact will be on the import.
So the import bill goes up. I'm moving to the question just because there are 114 people on the call and there are a lot of questions coming in. Hassan is asking, what percentage of spinning does KTML do in-house? And then his second question is that what sort of wastage do they have from cut to pack in stitching?
We we sell about 2.2 million meter of fabric in our 2.4 to 2.5 million metric, in fact, of fabric. Only 10% of it we buy from 10% of the yarn we buy from them. So it's an arm's length transaction which we do. KTML is a premium brand in thread. So what is happening is that people are willing to pay a premium in the Faisalabad market for our yarn. But whereas our own division, they find it better to work with the cheaper yarn. So to answer, it's only 10%. And regarding the wasted cut to sew, I think I'll have to separately. I think it is under. It will be a guesswork. So I don't remember now. So I'll pass this thing. Maybe I can send it.
That's totally fine. If you have already alluded to this to his third question, but if you can add some more color, which is the ESG initiatives which you have taken. You mentioned the water treatment plant. You mentioned that you recycle the water. Any other sustainability initiative which you would like to highlight?
In textile,
can I jump in here, Ali, if it's okay, because I've got a related question on ESG, if that's okay with you.
Sure, please do, Awais.
Sure.
I am so sorry to interrupt. Please forgive me. Thank you so much for your time. Very much appreciated. ESG obviously is a big theme for us in Europe, less so in the US. And what we have noticed that customers and companies are willing to compromise on price if a certain company is meeting its ESG credentials. Is that something which you have observed, or is that something which you are going to utilize more by further advertising your ESG credentials to the global market?
Yeah, Awais, you're absolutely right. The niche market we are operating in, we are not selling, as I've mentioned earlier, the bulk run-of-the-mill products. So the niche you go, the ESG requirement becomes important. And that is the reason why our average selling price is high. I've talked about water is a zero emission. We are converting into solar very quickly. So this would mean that we are not running fossil fuel. The furnace oil is not being used to produce electricity. Either it will be a solar or the electricity produced out of gas, which is also a little bit much cleaner than the fossil fuel. We don't have coal-fired power plant in there. And then particularly we are working on the plantation side, and then also we in a group and where KTML took the lead, we last year put up a hospital, teaching hospital unit we have donated to Gulab Devi Hospital. That was worth about 200 million rupees, which would be roughly 1.4, 1.5 million US dollars. So this KTML is very focused in producing clean, environmentally friendly goods.
Thank you for that. Awais, do you have any follow-up question? If not, I can move to the next question.
Yes. One more, if I may. Fast fashion is not only becoming a big thing in the West, but it's also becoming more relevant in the emerging economies as well, including Pakistan. I mean, how are you reacting to fast fashion, or is that something for the future?
Yeah, I think this is going to be. If you can elaborate your question more, please, Awais. Your speaker is off. Ali, if you understood.
No, I don't know what fast fashion is. Aves is he's a managing director at Jeffries, so I don't know. He will probably explain fast fashion because I don't know that.
Probably. Uh, you know, perhaps it talks about the fashion business. So currently we are only producing bed sheets. So the group had been in in evaluation of entering into different lines like shirting business and workwear business, but and the bottom wear business, but that's it's totally a different line. So that could be something for the future.
Great, thank you. Moving on to the next question, Hassan Raza is asking that what is the current fuel mix of the company? And recently there have been talks of gas price rationalization. Electricity tariffs have also might also go up. So what kind of commitment does the textile company generally and KTML in particular have from the government in terms of tariffs for energy?
Yeah, the government has assured us at the APCMA level, at APTMA level, that because they have a focus on the textile exports. You see, one of the differentiating factor between us and our competitors were actually the cost of the energy. The textile and the electricity used to be the most expensive electricity and the gas prices vis-a-vis Bangladesh, Sri Lanka, India, and Vietnam, and all these countries, textile exporting countries. So what we did like 2 to 3 years ago at APTMA level, we went to the government and we showed them that look, if you want to increase the exports, so you have to put us compatible vis-a-vis the energy cost. And the government was shown energy costs for the different countries, and they've realized it. So we have a commitment that you see the rates will not increase, but at the same time, most of the textile companies, what they're doing, they're like ourselves also, we are putting a lot of solar energy, so that in just to mitigate the fact that at some point in time the government, it is a cost and sale rate. If it is costing government electricity at about 12 rupees a unit, they can't give it at about 7 continuously. They continue to give us at about 7. So we are trying to mitigate it through solar, like most of the textile companies.
Great, thank you. His second question is that you spoke about expansion. Can you give us some sense of the quantum of expansion over the next 3 years and which segments which you would like to expand in?
Yeah, we'll expand in weaving. We'll expand in spinning, and we still have idle capacity in our home textile division, and that's because if we want to sell it, we can sell it today or everything, but we want to have a certain area of the niche market. Probably in next 3 years, at the tail end of 3 years, we'll be expanding in home textile, but most of these expansions will happen in spinning and weaving division.
Thank you. I'm combining two questions. One is asking for the outlook for cotton prices, and the other one is unit prices for you over the last 6 months and the outlook for the next 6 months.
Yeah. Ali, the reason why, if you see, our GP had been very consistent over the few years is that we, as a company, we don't heavily bet on cotton buying or hoarding. Or so what we do is that we sell for the next probably 4 to 6 months, and then we lock the rates for the cotton, and or we take in cotton for so whatever. So whatever we have sold, we secure the cotton. We don't go overboard. Like if you feel that the cotton is low and you try to speculate on the commodity, and then sometimes you go wrong, and then you can have a really bad year. So what we are doing is we are basically covering our sales. Our view about the outlook about the cotton prices uh, had been consistently okay. We take about 6 to 8 months view just for our own consumption purposes. We don't like buy for 2 3 years. So 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 our view is that the commodity price is, like you see, every commodity is almost at the uh, higher side. So we see probably the same happening to cotton, and they it's not going to get much cheaper. So it would range between anything between 10% plus minus. But so it's not going to double, it's not going to half.
Thank you for that. There's another question from Satish, and he's asking about your cement business, and especially the environmental exposure for that business. And he's asking that, is there any way or any technology which can replace coal usage in cement or reduce your coal consumption?
Yeah, we are the only company in Pakistan which actually is doing. So what we are doing is we are substituting. It's not a cleaner sort of a thing, but it reduces the requirement of the coal by about 30%. We are the only company which is using petroleum coke as substitute to coal. Pet coke, it is called, is 30%. It has 30% higher BTU value, and it costs you the same amount of money normally. So if it is the coal is 145, and the pet coke is also 130, 135, but on top of it, it has a 30% higher calorific value. So which reduces your requirement by 30%. So that is also one of the reasons, despite the fact that we are very far away from the port and we have a lot of inward freight, we are one of the lowest cost producer of cement in Pakistan.
Assalamu alaikum, Mohsin Saab. This is Aisha Fayaz from KASB Securities. Thank you for taking out time for us, and your feedback is so informative. My question is related to the cotton inventory position for the company. If you could comment on that.
Yeah, as I've said that we just buy for what is required for ourselves by the time the new crops comes in. And you would all be aware that the cotton crop was not that great this year, and gradually the crop is declining in Pakistan. Due to many reasons. If I have to tell you, I think we'll have a stock of until May next year, April, until April, May next year, and then we continue to buy imported cotton. We don't stock the imported cotton. We just continue to buy the imported cotton.
And how much is the imported cotton and local cotton?
Yeah, currently it's about 30 to 35% is imported.
All right. And what is your current order book situation given the aggressive textile exports?
You see, in exports, our order book is always the home textile is like that. Our order book is like next 3 months is the firm. Then you have projections for the next 2 to 3 months, and that's it. It keeps on rolling, and then we know we have institutional customers also, some hospitals. So from that point of view, their consumption is steady, and we know what they're buying. So if you'll ask me, the order book, the firm order book will be 3 months, and like this is how no importer gives you an order book of 12 months, and the way they operate, it's either 2 to 3 months are the firm orders, and then they give you the projections for the rest of quarter or 2 quarters.
All right. And furthermore, I wanted to ask you, what is your current power mix? Because abhi aapne jis tarah se highlight kiya that you are moving towards solar. So what are the current sources of power that you are reliant on?
Yeah, yeah. You know, at Gujar Khan, we are mostly the grid. At Pindi, we are mostly gas and solar. And at one of other sites, which is in Lahore, which is our weaving division, it's also gas. So I would say about 60 to 70% is gas. The solar would, even though we'll be having about 10 megawatts of it, but the only efficiency is about 18%. So if you put up 10 megawatt on a 24-hour basis, you're getting only 1.8 megawatts. So the solar, I would say, is about 10%. But we want to increase, because that's significantly, even if you go up to 20%, 25%, it significantly can reduce your cost and the cash flows, because it's a zero cash flow game in solar. So this is the mix, what we have, about 65% gas, and the rest, and the 10% this, and solar, and 25% is grid. Babda.
So we have a lot of questions coming on our chat, and Uzair Zubair is asking, till when has the government committed to provide subsidized electricity / gas?
Sorry, till when?
The government has committed to provide subsidized gas and electricity rates.
You know, this we hope it will continue, but as you know, it's very, the government policies in Pakistan, more than us, they keep on changing. So I can't say, if I say that it's going to happen for the next 2, 3, 4 years, and it can reverse next month. But you see, what I can reasonably state is that the focus of this government is very much on exports. They are very, very keen in increasing the exports. So I believe they will continue to provide these benefits for at least a couple of years, a year or so, until the time that we have alternate source, and then the lot of capacity kicks in because of the expansions happening due to cheaper loans. If your volume increases, you have more contribution to, even bear the higher electricity costs. This is what I personally feel, that government will have to support the industry for at least 2 years to take the export to a certain level, and profitabilities of the companies to certain level, and at the same time companies will have to find the ways of alternate energy so that they can sustain after a couple of years even the higher electricity costs.
So my follow-up question on this would be that there are various talks of gas prices rationalization, electricity tariff hikes are also unavoidable. So is there any commitment from the government's end in terms of tariff fixation for KPML in particular?
No, not for KTML. It will happen for all the textile industry. It is being negotiated at APTMA level, All Pakistan Textile Manufacturers Association, and then at APTMA level, we have assurances that this should continue for at least a foreseeable future.
So Hamza Rahman is asking, have you considered vertically integrating further into retail?
Yeah, we have thought about it, but you see, no, at the moment it's something for the future, not particularly in next couple of years. And the dynamics have changed a lot because the type of business we are in is home textile, and the women wear sort of business, the yarn which we produce. So we can visibly see the difference. The consumption pattern for the yarn and for the lawns business for women wear are different. It's a consumption economy. Every woman will buy about 5 to 10 or 15 suits a year, and then she's going to scrap those suits for next season after 3 to 6 months. Now, this is not happening for the bed sheets, particularly in Pakistan. This is not happening particularly for the socks business in Pakistan, because it's cheaper to wash here, unlike in Europe or elsewhere. So we will continue to wash, and we change our clothes because of the other fashion purposes. So that is a consumption economy. For home textile business, where we are, our ultimate product is only home textile. Had it been lawn on other products also, then it would have made sense to go to retail. So at the moment, just on one product, I think it's not viable, and probably you'll have to check with other companies also, Gulaman and all these. I think in bedsheet and home textile side, they don't make much money. It's other business which supports it.
Makes sense. So Saad Iqbal is asking, what is your take on cotton shortage?
Cotton shortage, government is working on the seed, and they're also concerned. They've asked textile industry also. So they're working, they're trying to come up with a textile policy, the agricultural policy, where they're going to support the cotton. And mainly the seed is the starting point. I think a lot of work is being done there. But I continue to see a gap, and that will be obviously imported.
So we are just left with 10 last minutes. So I'm going to ask a few more questions. So one question is from Abbas Zedi from Maple Leaf Capital. He's asking, a recent USDA report forecast cotton consumption to exceed production next year. Where do you see international cotton prices going forward?
Yeah, I think I already spoke after the COVID. Um, Obviously, the run on commodity has happened, and it can last, we believe, for another 3 to 6 months. So the uh, the cotton uh, shortage obviously will impact the price if it is a global phenomena. Yes, but if it is a Pakistani phenomena, which is more likely, then probably the import will substitute. But as I've said earlier, it's not going to double and it is not going to halve. So it's going to swing at a probably around 10%. And we have to also remember that lot of man-made things are also coming as a substitute to cotton. Um, there's an Australian company. We imported a lot of stuff. Also, they are producing this yarn, which is coming out of straw of the plants, and that's even in properties. It is even better than the cotton. So it is lot of substitution is also happening, and I think globally the things, innovative things will also happen in on the raw material side.
Okay, so there's one last question from Abdullah. He's asking, government has removed duties on yarn import in 2022 budget. How would it impact KTML and spinning industry of Pakistan as a whole?
Yeah. Yes. Uh, uh, it is obviously it is going to it will impact, but if you will see the GP of the yarn industry, it's very high. So what we believe is that maybe there will be a delta of about 4 to 5% in the yarns, on the yarn side. But then most of the people are, if you see the export numbers, there is a huge growth, and the 23% growth is basically led by the areas uh, which are value added products. So even if the raw material prices increases, if as a value chain, if you're moving towards higher value added products, which fetches you higher rates, the higher yarn and higher cotton prices can be retrieved from the higher sales price. And I think this is what will be happening in Pakistan textile industry.
Thank you so much for your time. And I can sneak in one question. It has come from somebody. He's asking about GSP plus status, and then your total sales to Europe, and is there any risk of Pakistan losing GSP, and how will that impact you?
Yeah, I think obviously when we got the GSP status, so our sales increased by about 10-15%. So this is the kind of impact which will have. And for particular, I don't know about other people, but particularly for KTML and the kind of stuff which we're doing a lot of embroidered embellishments and all this stuff, which takes a lot more time to complete, and it fetches more value also for us. And it is not easier for the buyer also to shift. Probably if the GSP status goes away, which we believe it is an unlikely scenario. If it goes away, if it is an impact of like 10%, then it will be like give and take 5% probably will reduce the price, and 5% they'll take the cost. And that's only like, additional business of 10% which we received. So I don't see that as a major threat to particularly KTML.
Great. Thank you so much, Mohsin Saab, for your time. This was extremely insightful and useful.
Thank
And for me, the key takeaway is what was really impressive was how you are focusing on innovation and also thinking a lot about environmental impact of your business. And besides that, you're expanding, and you're optimistic about the growth of the company. And on top of that, the stock is the valuation of the company is so cheap, as you said, it's negatively priced. So it's very, very attractive. And from Pakistan perspective, also, it's very promising to see companies such as yours and talking about expansion in a sector which is the largest export generator for Pakistan. So thank you for your time, and thank you for giving all this positive message to us.
Thank you. Just to end, anybody who is buying KTML gets 2 Maple Leaf shares.
Absolutely, absolutely. So there's another benefit of that. Absolutely. Thank you for your time. The next presentation starts in 3 minutes. Mohsin Saab will be welcome to join and listen to that as well. And in the meanwhile, we can take 3 minutes break and be back in 12 o'clock to start the next session on time.
Okay.
12 o'clock UK time. So that's 4 o'clock Pakistan time.
Very good.
Thank you.
Thank you, Ali. It had been good. Thank you for moderating everything. Thank you. Thank you. Bye.
Pleasure. Bye. Are we ready to start the next session? Our next speaker is from Gul Ahmed. Aisha, can you please introduce and let me know about our next guest speaker and also unmute him?
Our next speaker is Mumtaz from Nishat Mills, and he's going to join in a few minutes.
Okay, that's great. So we'll be starting in guest speakers from Nishat Mills joins, and after that we have one more session with Gul Ahmed. And in the meanwhile, I got my coffee, so I had enough time to just jump. And so we're just waiting for Mumtaz Saab to join us. Aisha, I think Mumtaz Saab is here. Mumtaz Hassan, can you please unmute him? Thank you. Mumtaz Saab, now you are the
Hello.
host. Hello, Assalamu alaikum. You want to hear you as well.
Waalaikum Hello, actually, I feel there is some distortion in the voice. Will you please repeat?
जी मुमताज साहब आई कैन हेयर यू क्लियरली मैं कह रहा था कि अगर आप अपनी वीडियो भी खोल लें ताकि so that we can all see you as well while you talk about the company. Thank you. So Mumtaz Saab, welcome to this session. We have 113 participants watching you right now. They're all investors in Pakistani stock market, in textile sectors, and also in your company. And so we are delighted to have you. आपसे पहले अभी Mohsin Naqvi Saab, the CFO of Kohinoor Textile Mills, was presenting, and he gave us a great overview of what's happening in the sector and also the plans for their company. So if you want, we can have a similar format. Would love to hand it over to you to tell us a bit about the business, the outlook, how do you see, what are your plans, and then we can open up for questions from the audience, and the audience will write it on chat and I'll read it for you.
Okay, I can see there are a lot of people, and first I will share my presentation.
Great.
I will give an overview of Nishat Mills Limited, then I will talk about the topic of this conference. So can I share my screen?
Yes, absolutely. You are the host, so you can share your screen.
Okay, can you see me?
Yes, we can.
Can everybody see the screen?
Yes, we can.
Okay. These are the contents of my presentation, which I would like to discuss about. First, I want to have a little bit introduction about the Nishat Group, because Nishat Group is the largest group, one of the largest and leading business houses in Pakistan, and Nishat is its flagship company. Our group is highly diversified and has presence in textile, cement, banking, insurance, power generation, hotel and hospitality, agriculture, dairy, real estate, aviation, paper products, and automobile. Total assets of the groups are over 2.1 trillion. The group provides direct employment to around 43,000 employees. 7 companies of the groups are listed on Pakistan Stock Exchange, and our group is playing a very important part in the industrial development of Pakistan. Now we will talk about Nishat Mills Limited, our company. I want to uh, have you a bit introduction about the company. Nishat Mills Limited started its business as a partnership firm in 1951. So you can see the company has enjoyed its golden jubilee. It was incorporated as a private limited company in 1959. The company was listed on Karachi Stock Exchange on 27 November 1961. Karachi Stock Exchange is now Pakistan Stock Exchange. The company is the largest vertically integrated mill in the country. It has production facilities of spinning, weaving, processing, stitching, towel manufacturing, and power generation. The company has 34 manufacturing units located at Faisalabad, Sheikhupura, Firozpur, and Lahore, mostly in Punjab. We have also our presence in Karachi. We have a office in Karachi too. Nishat was established its own power generation facilities at all plant locations. The company provides direct employment to around 19,000 individuals. We are an export-oriented company and one of the leading exporters of Pakistan. We have working relationship with top brands of the world. Therefore, major portion of earnings is export-based. Company has achieved significant geographical diversification in exports and sales mix over the years. And you can see 75% of our sale is uh, export sale, and while only 25% is local sale. Nishat is the largest composite textile unit. I have already told you, an excellent mix for products and garments. Major focus is on value addition. 75% of our products are value-added products. This is the introduction of our business segments. Nishat has 7 business segments, from spinning to power. Production capacity of the spinning is around 86 million kgs of yarn per annum. Similarly, production capacity of weaving is around 289 million square meters of grey cloth. Dyeing capacity is 52 million meters. Home textile capacity is 60 million meters of fabric per annum. Terry production at this moment is 300 tons towel per annum. Production capacity of garment division is 8.4 million garments per annum. And power generation segment, which consists of engines which use gas, furnace oil, diesel, steam, solar, and coal, has capacity of 138 megawatt. This is the introduction of our machinery. At this moment, we have 242,000 spindles and 3,000 rotors in spinning. We have 790 looms in weaving. In dyeing segment, we have 3 thermosol dyeing machines, while in home textile segment, we have 2 thermosol dyeing machine 3 rotary and digital printing machines, and 1,686 stitching machines. We have just installed a global manufacturing unit, and it was commissioned in December 2020. The TARI unit has 24 looms, 5 dye machines, and 49 stitching machines. Our garment segment has 1,661 stitching machines. We have 8 power plants. Now we will look briefly on the financial performance of the company over the year. So, this is variance analysis of profitability of financial year 2020. The year ended 30 June 2020. The financial statements of the year ended 30 June 2020 have already been published and disseminated. Let us discuss the variance analysis of profit after tax for the year with the last year's profit after tax. The company was performing very well until the outbreak of COVID-19 pandemic, which negatively affected the profitability. Profit after tax for financial year 2019 was rupees 5.8 billion. Gross profit decreased by 380 million during the current year as compared to the last year. Profit after tax for FY 2020 decreased further due to increase in distribution and admin expenses by 225 million. These decreases were offset by decrease in finance cost, other operating expenses, and provision for tax. However, biggest decrease in profit after tax came due to decrease in other income. Other income decreased mainly due to decrease in foreign currency exchange gain. This is variance analysis of profitability for the third quarter ended financial year 2021, which we have published. The last quarter has not been finalized yet, and it is under process of audit. In for the period ended March 2021, profit after tax by 3.6 billion, while in the corresponding period it was 2.9 billion. The major increase is in other income, which is 484 million rupees. This is the trend of revenue over the last 5 years. Our revenue for the year ended 2020 was around 61 billion. This is the gross profit and profit after tax ratio. You can see gross profit was around the same as compared to the last year, but profit after tax decreased by around 4%, which was due to the dividend income, decrease in dividend income. This is the comparison of gross profit and profit after tax. This is dividend payout and dividend yield. Our dividend pay out is very good because of profitability. dividend per share, share price analysis. I think all of you routinely follow the share price of Nishatmas Limited. These are the total assets, around 110 billion. This is future outlook of Nishatmas Limited. As the COVID-19 severely affected our operations during the financial year ended 2020 and 2021. But we hope that now the markets are getting started to open, especially the US market, which is where our primarily our buyers are located, and European market. So we hope that after the vaccination of major population, America and Europe, markets have started to open up, and the stocks of our buyer have already been run out. So we hope this year we will see increased demand in USA and Europe, and accordingly our sale will increase. We have already started purchase of cotton, and there is a very difficult scenario prevailing at this moment regarding the output of cotton. But as per our practice, we have started to accumulate stocks of cotton and fabric. We have made around investment under turf scheme amounting to rupees 5 billion. Our major investment in spinning sector, where we are going to install a open end unit of 4,000 rotors, and next we are going to add a further unit of 130 looms in weaving segment, and also 40 loom in another location of weaving segment. Actually, we have two part of the weaving segment. One is located in Biki and other Lahore. So we are going to install 130 looms in Biki and 40 in Lahore. We are also going to add the capacity of towel manufacturing unit. Dividend is dividend income continuously contribute to our profitability of Nishatmas Limited, and therefore we are going to further invest in Hyundai Nishat Motor Private Limited and Nishat Subsidized Electricity Limited during this year too. This is the future outlook of Nishatmas Limited. Now, I will briefly talk about the textile sector overall. These are the figure most of you know. Textile sector is around 8.5% of GDP of Pakistan. It implies 40% of total workforce of the country. 46% of it represent 46% of total manufacturing sector. It contributes 60% in total exports, which means the five export-oriented sectors. Only contribution of Nishatmas, 60 contribution of textile sector is 60%, while all other sectors leather, carpet, sports goods, and surgical goods, they only contribute 40%. I am emphasizing this to highlight the importance of the textile sector. Total, there are 517 textile units in Pakistan, out of which 40 are composite units. Pakistan is one of the major producers of the cotton, and we rank 5th in the world. If you go back to some year back, 5 or 6 year back, Pakistan was ranked as 4th in the world. Now Pakistan has come down to 5th. We have highlighted the reason in the following table. Our area under cultivation the cotton production and yield has decreased. The reasons are, first reason is area. Area under cultivation has decreased, and it has decreased over the year continuously. Then the bales, the total output has decreased. In year 2020-21 is showing provisional figure. Provisionally, in this year, provisional output is around 7 lakh bales. 7 million bales. Well, over requirement is I think 16 million bales. Our yield has also decreased over the years. As you can see, it has decreased from over 700 kg per hectare to 578 kg per hectare. Though, therefore, you can see that the cotton, which is the major raw material of the of textile sector, the output, local output has decreased, substantially has decreased. Pakistan's share of textile export is also very low as compared to other regional producers like China, India, Bangladesh. Our share is only 1.7% as compared to India, which is more than 4%. Our energy cost is also our regional competitors. Government policies about textiles are also inconsistent. Inconsistent in the sense that they are not clear what to do with textile sector in order to enhance the production or grow the sector. For example, there is a rapid shift how to provide these subsidies to textile sector. We will talk about this later on in the next section. These are some suggestions about the future roadmap of textile sector. The government should seriously consider increasing the local cotton production by incentivize farmers and develop quality seeds. Similarly, duty-free import of cotton should be allowed along with polyester staple fabric. At this moment, the import of cotton is duty-free, but you cannot know when government will impose duty on it. Similarly, if it is possible, the import of cotton from India should also be allowed. If they had allowed import from India during the COVID period, during the last year when the India and Bangladesh were severely affected with the COVID-19 pandemic, and we had the opportunity to grow over exports, then this situation would have been much better for Pakistani textile. Similarly, the government should provide easy credit to all textile sector. Export refinance facility should be available to yarn and gray cloth as well. Regionally competitive energy prices should be continued for the next 5 years. Sale tax, income tax, and duty drawback refunds should be immediately paid by the government to improve the liquidity of the textile sector. Limit of LTFF should be increased from 3 billion per project to rupees 5 billion per project. Moreover, the conditions which a textile exporter has to meet after availing LTFF should also be make easier. Sale tax zero rated facility should be reintroduced. Duty drawback of taxes scheme, which has completed its term as on 30th June 2021, should be resumed. DTR scheme should be simplified so that exporters should get benefit from it. At this moment, only 10% of exporters are getting benefit from DTR scheme due to its complex nature. So this was the end of my presentation.
Great. Thank you, Mumtaz, for this presentation, and it was very insightful, and I love the data, and it's great to see that your group, which is involved in so many different sectors in Pakistan and employs 43,000 people, as you highlighted, is expanding in so many verticals, because at the end of the day, that shows the optimism and the growth that the company is investing. And also you highlighted the challenges which the sector faces, and you gave some really good and strong recommendations for how the government can help the sector, which I'm sure my colleague Aisha will publish in a report and highlight that to the audience which we have. So we have over 100 participants right now, and I'm sure that we have a lot of questions. So जैसा पिछले सेशन में किया था, अगर आपके questions है, please write it on chat and I will ask them to Mumtaz Saab. But before that, I want to kick off with the first question. We have 29 minutes for questions, so I'll kick on with the first question, which is that, Mumtaz Saab, can you tell us a bit about your investment in autos, and how do you see the demand over there for the products which you're bringing out into market?
Yes. Our share in Hyundai Nishat is around 12%, and there are other investors, BGC, Miller, etc. There is a lot of demand for our products, and if you go through the balance sheet, there is huge amount balance sheet of Nishat, Hyundai Nishat, huge amount of advance appearing in the. So there is a lot of demand, and people are very interested in those products.
Great, thank you. So you're essentially saying that in the on the balance sheet, you can already see the advances, which shows how strong the demand is for the cars which you are launching. I'm moving on to questions which people are writing on chat. मैं इन questions को पढ़ के आपको बताऊंगा, and would be great to get your answers on them. So kicking off with the first question, it's from Uzair Zubair, and he's asking that, why are the company's gross margins lower than that of your competitors? He's saying that your gross margins are lower than competitors. I don't know whether he's talking about specifically about the textile business or whether he's talking about the company as a whole, but do you have any comments on that in terms of your gross margins versus other listed companies in the textile sector?
Actually, I would like to know the company. Actually, I think Mr. Uzair is comparing our gross margin with that of textile companies, but I would love to know the name of that textile company, because if you are comparing our company with which is a composite company with the spinning unit or any other company which is dealing only one product of the value chain, then this does not make sense, because we are a composite unit. Sometimes over one of our segment performs and sometimes other segment performs. For example, this scenario which was last year, cotton output, local cotton output was low, and those mills who had stocks of cotton, their spinning segment has performed very well. Okay, so if you have a composite unit, your spinning segment performed well, but the other segments in value chain might not have performed as good as spinning segment. But if you have only your company has only a spinning unit, then you would have very good GP ratio as compared to Nishat Mills Limited. So now Uzair has given the name of the mills. Gul Ahmed has shops. Their retail business is part of the Gul Ahmed company. So while Nishat as a separate company for retail business, so you cannot compare Gul Ahmed with Nishat. Similarly, KTML, they are mainly in spinning and weaving and a home textile segment, which is not as large as Nishat Mills home textile segment. And Nishat Mills had, other than these segments, Nishat Mills has a separate dyeing unit, which is one of the largest, and has a separate garments unit. So you cannot compare this. So Nishat Mills, no doubt, is too big, but it's, when you go to the gross profit margins, you cannot compare it with other companies. So if our company is not earning in terms of GP, but it is too big. If you go to the reports of those companies, sometimes they might have performed negatively. but Nishat has not done so.
Great, thank you. Totally get
Okay,
your.
next question.
Sorry, just 1 second. Yes. So there's a question which is that, you 70% of your earnings come from your portfolio companies. Going forward, how important do you think that the earning growth will be driven by the core business of textiles, or in terms of prioritization, you also think that the other investment portfolio companies that you have are equally important? How do you see your business? Because given the fact that you're so diversified.
Actually, both of the income streams are very important for us. Dividend income, if the textile sector, textile operations are not performing well, then dividend income sources, both are very important. And I think I cannot rate, or nobody can rate that we should discontinue our investment portfolio or reduce it. This will not be a wise decision.
Absolutely. I don't think there's a suggestion that you should discontinue it. I think it's just a question in terms of understanding the future plans, that, in terms of prioritization. And as you have said, that you think that they're equally important, and perhaps you will continue to invest in other areas. Moving on to the next question is from Asad Makbul, and he's asking that, do you expect higher dividend from your investment in LPL, PKGP, and NPL? So I think he's referring to the power companies which you have in your portfolio. Do you expect higher dividends from them?
How is Asad comparing when he says higher dividend?
I suppose
higher as compared to last year?
Yes, I suppose that it will be compared to last year.
No, it will remain almost the same, but actual decision is the board of these actual decision is made by the board of these companies, but I think the dividend will remain the same.
Okay, thank you. Moving to the next question, it's from Syed Sabi, and he's asking that, why do you not sell yarn in the local market? What's the reason for exporting it when currently local market is yielding higher margins?
We sell yarn in local markets. Our spinning segment exports around 45% of its output. But our focus is on export. Nishat Mill's focus is on export markets. We are export oriented. There are so many benefits which are offered by the government to export oriented units. That is why our focus is on exports. We have another company of Nishat Group, Nishat Linen Private Limited, which caters to the local market mainly. Actually, for your information, I can tell you that there are two business segments in Nishat Linen. One is retail shops, and other is spinning. So spinning is for the local market, but we also sell in local market from Nishat Limited.
Got it. Thank you for that. And Mumtaz, given that fact, you mentioned that export is an important area for you, and the government is giving incentives. And I asked this question to KTML before you as well. How do you see we have seen this pickup in exports this year? Do you think this will sustain? What's your view on the outlook for Pakistani textile exports over the next 12 and 18 months?
I think over exports will sustain during this period, which is a short-term view. considering the fact that markets in USA and Europe are opening up. So they don't have purchased stocks during the last year or so when the pandemic started. So the demand is increasing. We hope that demand during next 12 or 18 months will increase from them, and over textile export should increase during this period. I think you are asking about that when we received extra orders while there was pandemic in Bangladesh and India. That I think you are asking about those customers which came to Pakistan, whether they will remain with us or go back to India when the India will recover from the pandemic. I think they were not pipeline orders, and they were small orders, and there is a possibility that they will go back to India and Bangladesh, but the impact will not come 12 to 18 months, because the demand of those customers which were already buying from Pakistani textile mills, they will rise, and the exports of those units will continue to sustain in near future.
Great, thank you. That sounds very promising, and I really hope that Pakistani exports continue to rise. We certainly need higher exports from Pakistan. There's a very good question from Adil Salim, and he works at JS Investments, and he's asking that, compared to Vietnam and Bangladesh, our exports have lagged, and is the major reason for this higher cost of electricity in Pakistan compared to these two geographies? And he's saying that local manufacturers always point out that the two reasons are local cotton shortage and higher cost of electricity. But then he's saying that Vietnam and Bangladesh don't even produce cotton, so he thinks that higher electricity costs or energy costs is perhaps the major reason why Pakistan has lower exports compared to those two countries. Would love to get your views on that, especially since you have highlighted the challenges which the sector face.
This is really a good question. Energy is one of the reasons. Electricity is one of the reasons. But inconsistency in the policies of the government is another reason. I give you example of DTRE. Bangladesh has similar kind of arrangement in for its textile companies. Over only 10% of the exporter are availing this facility because of complexity. It is so complex. You have to do a lot to meet the meet its conditionalities. But in Bangladesh, 70% of the textile avail this facility. So the main thing, apart from the energy and labor cost, the other thing which I would say the major thing is the inconsistency in government policy in providing the facilities to the textile sector. And for example, the economy of Pakistan is so uncertain. You do not have stability in foreign exchange rate, and our marketing, our management, which deals with the buyers, they have very tough time when the dollar took dive from the from 105 to 160. So there are so many factors. The one is government inconsistency in policies, and there is other Pakistan overall economy is not performing good. So there are other things apart from the cotton which affects the performance of textile sector.
Great, thank you for that. And it's very clear that it's the inconsistency in the policy which is the issue. Moving on to a question, Bilal Saab is asking, he's the Consul General of Pakistan in Hong Kong. And he's asking that there's our textile industry and entrepreneurs, including the APTMA, are they taking any measures to negotiate with the government for land zoning or to give support price to farmers to increase cotton production? I think you mentioned cotton production as a major issue. So he's asking that, is the industry working with the government or with the farmers to give some kind of support price to farmers to improve cotton production?
Actually, it is not in my knowledge if APTMA or any other organization is in negotiation with the government on this, but this is not the role of these associations. So I don't think that APTMA or any other association, Pakistan Textile or organization is.
I can ask the same question in another way, because you mentioned that cotton or the lack of cotton is an issue. Any suggestions on how can Pakistan improve cotton output?
Yes. First, the government should provide incentive to farmers, because the sugar output has increased. If we go through the data provided by the Pakistan Statistical Bureau, you will see that the output of sugarcane has increased, but the cotton, wheat decrease. Why? The farmers have more profitability in those sectors. Second major reason was decrease in yield. The government has not invested in research and development and provide developed good seeds for the cotton production. This is the second major reason for decrease in the cotton output, because Pakistani farmer have to purchase cotton. They have done so. I think starting from into 2005. And the BT cotton was they are usually, and the over the years they are using the same seed, and resistance against disease in those seed has decreased. So government should invest in research and development of the seed along with the private sector. Government should provide incentives to private sector for the development of the seeds, and the role of the government should only be to regularize the seed market. I think if both of these things, first to provide incentive to farmers and then seeds, Pakistan cotton output will increase
Great. Thank you, Mumtaz Saab. We
in coming
have
years.
time. We only have 5 minutes left, and then we'll take a 5 minutes break for the next presentation, which is with the CEO of Gul Ahmed. In the meanwhile, I'll request my colleague Aisha to share her detailed textile report on Zoom chat. Here, Aisha, if you could do that. She has covered Nishat Mills, she has covered KTML and written a detailed report on the sector, which would answer a lot of the questions which have also come. So Aisha, if you could please kindly share that on chat. There are some more questions from Bilal Saab, who's the Consul General of Pakistan in Hong Kong, and specifically related to policy to improve the sector, and especially vis-a-vis the role of APTMA. And Bilal Saab, I'll get back. I'll connect you with some of our contacts at APTMA who can perhaps discuss this in more detail. I'm just conscious of time regarding this because this is more focus on investment and the company. Mumtaz Saab, I have a last question for you. No, thank you for this detailed presentation. And Nishat Mills has a critical role in Pakistan's textile sector. And I was
Alisa, I could not hear you properly. There was some disconnect.
Sorry, मैं last सवाल आपसे ये पूछना चाहता था कि आपने your company plays such a critical role in Pakistan's economy, and you mentioned about expansion in both textile sector as well as in other sectors, which you are planning to do, which is a very optimistic signal because it shows that you do see the future being brighter and you expect to grow. And आपने ये भी बोला कि in textile you do expect exports to sustain this level and even grow because of higher demand from the US. So if you had to quantify, if you had to give your opinion on how do you see the next 12 months, do you think the next 12 months will be better than the last 12 months? So are you more optimistic about the future, or do you think that the challenges are greater in the next 12 months?
I think for Nishat Mills Limited, I will talk about Nishat Mills Limited.
Yes, please.
I foresee a bright future as compared to the last year. We will perform well in over value-added sectors, which is around 55% of the total value chain of Nishat Mills Limited. We hope so that next year will be better as compared to the last year.
Great. Thank you so much for that answer. Because as you know, as investors, we are not looking at, we are looking at the change. We are looking at, are things improving or are they worsening? Because we all know about the challenges of Pakistan. We all know, and it's not, as an investor, we are looking at directional things. Is the outlook better or is the outlook worse? And it's great to hear from you about your opinion about Nishat Mill's future, and which you're saying that you think that it could be better. You think the next 12 months will be better. So thank you for your time, Mumtaz Saab. We will now take a 5 minutes break and then we'll reconvene for the next presentation, which is by Gul Ahmed. So thank you.
Okay, thank you. Allah Hafiz.
I was saying, in the meanwhile, Aisha has shared her detailed report on the textile sector on chat. Please do download it. I highly recommend. And also, this week on Thursday, we are also hosting another textile-related company, which is Image. Aisha has also covered that, and she has written a lot on it and also made a few videos about it. So for those who are interested in the textile sector, that's a follow-up event on Thursday this week. And our colleagues from the sales team will be reaching out to you and extending the invitation to you. And we'll start back in 5 minutes. So please do refill your coffee cups or water, and we'll start again. Welcome back. We are delighted to have Zaki Bashir Saab, who's the CEO of Gul Ahmed. He's joining us from the US. Zaki Saab, you are a co-host. You are on mute right now. I'll request my colleagues Aisha to please unmute you. I think you are unmuted from some other account, which is Gul Ahmed. For those who don't know, Hi. Hi, Zaki Saab. I think other account. Aisha, can you unmute this account?
Yeah, I'm fixing it.
Is it done? I think it is now. Zaki Saab, you are on unmute now, but your video is off. So if you could please turn that on. For those who don't know me, I think most of you do. My name is Ali Farid Khwaja. I'm the chairman of KASB. I'm joining from London, and my colleagues, we have over 94 participants right now, mostly from Pakistan. So Zaki Saab, thank you for taking your time. I'm conscious that we are short of time and we have 30 minutes from you, but we are delighted that you did take your time out. So the format we have followed with the others is that we have asked them to present their views on the sector and the company, and then we have asked them a few questions. So we're happy to do that. It would be great if you can just, give us some opinion on, your company and the outlook especially, and then perhaps for 10-15 minutes, and then we can have 15 minutes questions from the audience.
Assalamu alaikum and good afternoon to all of you. I think there is a small presentation from the Gul Ahmed team. If they would share that, then we can start with that.
Great, thank you. They are co-hosts, so they can share that, and we can run that. So over to you.
So G, let's begin.
I think we can't hear your colleagues.
G, can you hear me now?
We can hear you clearly, yes.
Oh. So, I mean, if we look at the company, it's a legacy of 100 years. The company was established in Pakistan in 1953 and subsequently listed on the stock exchange in 1972. And obviously, the retail sector was launched direct as business to consumer from 2003. The shareholding structure is listed. Go ahead. So if we look at the sales, you can see that the company relies on domestic sales to the extent of about 50%, and then the rest is distributed between Europe, North America, and others. As you know, Ideas is being hived out as a separate entity, and that company would be a separate company from September, October, and it would be the results would be separately listed from backdated from January 2021. So please go on. If we look at the export sales, they're mainly driven by home textiles, where our largest customers are IKEA. Obviously, we also have a large customer base in Europe and the US. We have Joanne and Urban Outfitters, Next, Kellanel, Carrefour as well, making up major customers in our home textile segment. But however, IKEA has been continuously growing. Other than this, we have an institutional and hospitality sector that is doing very well. And that we see is continuing to grow as well. And the company's sales have registered a tremendous growth in the export sector. We've closed close to about $280 million. And next year, we're looking to grow to about $330 to $340 million in exports. Let's go on. The spinning capacity has been driven mainly by our new Otokoro yarn. And mainly, if we look at that, that has been extremely good for the company in terms of its cost efficiencies and its raw material yield. The current capacity stands at about 70,000 tons, and this will increase to about 90,000 tons by December per annum. There is 100% utilization and very good margins on this business at this time. The retail chain closed at roughly approximately 18 billion for the year, where e-commerce was constituting almost 20% of the revenue, which is good news. It's been a significant jump from last year. However, still this year was impacted by COVID-19 and its restricted timings in stores. We now have 110 stores in 45 cities. We have remodeled several stores. We have opened more stores. We continue to evolve and change. However, over here, we have had a loss of revenue, but we feel that next year the revenue would enhance considerably, given that we do feel Pakistan will start to get a grip on COVID-19 far better by September or October of this fiscal year. Again, this is depicting e-commerce sales. So we have crossed the 3 billion mark. It's a significant jump. And we do feel that our e-commerce platform is growing. Now we're going to bring in a host of other areas where we're going to integrate into our e-commerce, which will be beyond home and fashion apparel. And we will be announcing these integrations soon, inshallah. Again, just showing you capacity achievements. So its capacity is fully utilized, and we expect it to continue this way, even with the increased capacities coming online this year. So we do expect that this year we've closed at approximately 90 billion rupees for the year. We do expect about another 20% growth in the next fiscal year, inshallah. So we do have challenges where we have increased raw material prices. We have a volatile exchange rate. Again, we have the US dollar now in our favor. As of now, this quarter, it looks that way. The current account deficit in the country is growing, and exports are going to be more and more valuable. Retail can have an issue in terms of the restricted timings, but we hope that not so much so. And we do hope by September 1st, we feel that retail will resume full-time hours again. We do feel that because of the upcoming month of Muharram and August 14th holidays, that the restrictions may continue in Karachi at least until the end of the month. Gas availability can be an issue in the winter months. We've taken measures where we've taken 40 to 50% of our supply chain onto oil-based power generation if need be. And increased gas rates are always possible because of international markets. So again, in terms of expansion, we've expanded within our home textile category, where we've added a 30% expansion. That capacity is now fully utilized already and sold forward through to January. We expect it to be sold through to June. Knits and knits processing, the knit processing unit will come online by August 15th. It will go into production. It is already fully sold. It will add about $25 million to the company's top line in the first year, and maybe the building has the capacity to add about another 100% expansion, which would take it to about $50 to $60 million in the year after. Surgical cotton will come online in November. This is a medicated surgical cotton going into the spun lace segment. It's a very specialized and unique segment. Eventually, we will go into the spun lace lines ourselves. This also will add about $20 million on an annualized basis, but the production line will come online in December of this year. In retail, we are going into fragrances, and this is a big segment, and we expect that this would add 1 billion rupees to the retail segment in the next fiscal year. Again, latest state-of-the-art spinning. We have a vortex spinning unit, which will now come online in 2022. Other than that, 2021, the full spinning capacity will come online by November, December of 2021, which would be adding another 20,000 tons per annum this year. I think we can go on. I think the numbers are in front of you. It's been good. We expect the year to be good. Obviously, with a lot of expansion, we do require working capital. We have grown by about 35 to 40 billion rupees this year. We expect another growth by about another 30 billion rupees next year. So inshallah, that being said, the company will deliver good returns. So again, we see the 9-month picture. The 12-month picture is about 87 billion for Gulamed, and consolidated would be over 90. Profits, we do expect it to be in the range of about 6 billion to 6.5 billion, inshallah. I think we can keep going. If somebody has questions at the end, then we can come to those specifically. Again, substantial business growth in almost all segments. Let's go on. So as you all know, I'm in the US and on US time. You can go ahead and direct questions now for the next 10 to 12 minutes, and we will try to answer them the best we can.
Thank you, Zaki Saab. This was very impressive, and for me, just the numbers were so impressive in terms of growing so much, have ROEs of more than 26%, and the stock is trading at 4 times PE. It's just hard to believe that. How to rationalize as a financial analyst, how to rationalize those numbers. There's a question, just kicking off with the first question. Farooq Samir is asking that, have you considered listing on Amazon in addition to your existing e-commerce channel?
Yes, we will be listing on Amazon, but we don't want to dilute the ideas and Gulamed the brand. So we will be listing on Amazon, but with specialized brands and using our product and our expertise, but without dilution of our existing brand.
Got it. Thank you. The second question, Sana Khan is asking that sustainable sourcing, that is alternative fiber source from agriculture waste, is a growing trend from end customers in Europe especially. How is the management seeing this opportunity from an export perspective? And how can textile industry and Gulamed in particular capitalize on it, or is it too early?
So I would say that Gulamed is the largest player in the pre-consumer and post-consumer waste markets in Pakistan right now. And we have the largest installed capacity to utilize pre-consumer and post-consumer waste, which would be to the extent of about 50,000 kilos per day, which would be far greater than any other company in Pakistan that I know.
Thank you. Hofran Ahmed is asking, can you briefly tell us a bit about your power consumption pattern and the rate for the company?
Yeah, our power consumption is roughly about 48 to 50 megawatts. We have more generation coming in, which will take it to about 70 megawatts. The power is all based on gas, and the gas rate prescribed by the government of Pakistan, based that we are in the province of Sindh. We have a preferential gas rate, which is of about 786 per MMBTU. Other than that, the new engines that we have installed are now all tri-fuel engines that are coming in, and about 30 megawatts out of our 60 to 70 would be based to be able to run on oil as well. So that would give us the flexibility in case of any load shedding or pressures that go down, that they would run on oil. Also, we have increased the number of boilers, and the new boilers are also dual generation, which allow it to run on oil and gas in case of a gas shortage.
Thank you. This question seems to be very popular. It was asked to your peers as well. And so I'm combining two questions. One is the outlook for the cotton prices in the US, its impact on your exports. And secondly, how much cotton have you covered and what are the rates?
Yeah, we have covered cotton till January at about 84 cents. And then we have covered January to March at about 90 cents.
And any views on the US cotton prices and its impact on your exports?
I think it's highly volatile, but I think the most important thing is a supply chain constraint that even if you go to book cotton now, you're going to get delivery after 4 months minimum. So you're already sitting in almost August. And if the earliest you can get cotton now today is November in Pakistan. Other than that, local cotton is available where the prices are volatile and the quality is not so good. But the company is keeping its sort of mind and supply chain open to consume local cotton to increase our imported cotton stance and position.
Thank you. It is a question from Aisha on the Delta the rise in COVID and the Delta variant. Does it change any outlook for you? Do you think?
As of now, no. We have seen a significant increase in the dollarized price of our goods, which will kick in from October. So we are seeing a massive jump in prices and margins from October of this year. Most of our customers have built in now the new yarn prices and the new cotton prices. So we will see 60% of our customers increasing their prices from October and the balance 40 increasing them by January. And the average dollarized price increase, which we would see would be over 15%, and in rupees, it would be over 21%, and on our export sales. So that being said, with an export of about $25 million a month, the contribution margin of that would be somewhere around, over $4 to $5 million a month. So if you look at that number, that's somewhere around 700 million rupees a month, inshallah.
Thank you. I'm conscious of your time, so I'll just quickly squeeze in just two last questions. One is that you spoke about the expansion plans. Can you give us some timelines on when they will be fully operational?
Yes, I did tell you about the home textile expansion that has already come online and that is now fully running. And you will see the results again in October as the new prices kick in, because right now we're at old prices. In home textile, we sell goods very long. The knits expansion is going to come online from the middle of August, so you would see results from September. The surgical cotton expansion will come online from December. The spinning expansion will come online from October, November, and December, and add another 20,000 tons, which will be visible from January the fiscal year. The retail expansion is ongoing continuously, and we do expect a 20 to 25% growth again this year, and we will see the retail hive out in our next set of accounts, inshallah, and we will be ready for listing come November, December, inshallah.
Great, thank you. There are a lot of questions, but I'm just conscious of your time constraint. So posing the last question from Syed Manip Imam, and he's asking that about Idea's IPO. Can you give some clarity on the transaction structure? How much shareholding would you retain after?
Yeah, we would be looking to put about 25 to 30% into the market, which would cause a significant free float and a significant generation of equity to grow further and have further expansion plans. And it would be the largest retail sector IPO in Pakistan. So inshallah, we're engaged with companies to do this, and we have taken all of the stakeholders on board, and we are in the court process of separation, and inshallah we will get all approvals by September, and that being done, we will be ready for the next process to list.
Great, thank you. I will just squeeze just one last question, because I've asked this to your peers as well. And in terms of outlook, do you think the government is giving a lot of incentive to the sector, and we have seen a pickup in exports? Do you think the next 12 to 24 months will be better than the last 12 to 24 months?
I think that if you look at the last 12 months, like I said, we've grown in excess of 40%, right? So 45%. So if you look at a company growth rate on our size now hitting 90 billion, it becomes, in percentage terms, not as easy to grow, but we do foresee a 20% growth per year for the next 2 years also. So that being said, a lot of that contribution will come to the net profit area.
Great. Thank you so much for your time. This was very, very insightful. And sorry for people whose question I could not ask. It was just because of Zaki Saab's time. Thank you, Zaki Saab, for your time and for this presentation.
Thank you. If there's any other question, I do have another 5 minutes. I'm able to take more questions.
Oh, great. Thank you. So I'll just quickly just ask, how does the ban on Xinjiang cotton in products shipped to the US impact Pakistan industry?
I think it impacts us positively in the sense that the US is very clear now that they will shift more and more business outside of China. In the US, I've had several meetings here with people, and it's very clear that they are going to limit their purchasing from China on finished goods, regardless of where the cotton is from. So Pakistan has an opportunity, likewise, so does the rest of the world. So it's not that Pakistan has an uneven opportunity, but they do see Pakistan as the only other printing resource in the home textile industry. So I do see the home textile industry benefiting greatly from this.
So moving to with that, the next question that, is your target of 20% growth a bit conservative, given the fact that, there are these opportunities and you're also adding capacity?
That 20% growth is dollarized. So if your exchange rate changes, you'll have bigger growth. Got it.
Next question. People have complained about government policies and energy crisis, your peers in the textile sector. What has changed? Have you seen any change in the current government's policies towards the sector?
I think the government has been very pro-exports and very pro-textiles. I don't want to say more at this stage. I think that they've provided energy at the best rate possible. They have been very conducive for exports. They have not had a fixed exchange rate or tried to hold an exchange rate, which is good for exports and imports, that we don't get stuck in any cycles where it is misrepresented and it is a reflection of our real effective exchange rate. I think that it's important. Let's see what comes with the textile policy and the DLTL scheme. We're expecting some announcements within the next 1 week.
Okay. Best of luck with that. The next question, how will the wage parity between Sindh and federal area affect your financials?
Well, the Sindh government has not gone about it the right way. They have done it illegally. So it will be challenged in court by us and the Employers Federation of Pakistan because it's not legal. The minimum wage board did not recommend the wage. Hence, it should not have gone to the finance bill and should not have been passed. So I do feel that the legal system will take note of that and will prevent that from happening and will keep it in line with the rest of the nation or where it was. That being said, if, God forbid, this were to happen, it affects the cut and sew sector the most, where we have the largest labor population. So if we feel that at any time this is going to impact us, the company has sufficient lands in Balochistan, which is just across the border, to move across to the province, which is just next to site.
Thank you. And the last question, do you see growth in the polyester sector, especially in the home textile?
Yes, massive growth, and the company itself is engaged in the manufacturing of polyester cotton yarn to the tune of almost 40% of our capacity by December.
And can our polyester capacities, are they enough to cater to textile?
We have to use imported polyester. Pakistan's polyester is not competitive enough to cater to the re-export market.
Thank you for your time and that efficient use of the time with the answers.
Thank you so much.
My pleasure.
Thank you, everyone. Allah Hafiz.
Thank you for your time for joining this conference. My colleague Aisha will share her old report as well, and we will probably publish something on this in terms of our feedback on the conference. Thank you for joining. And as I said, there will be another event on the sector with the management of Image on Thursday. Thank you. Khud Hafiz.